New housing market data reveals that the housing market could be in big trouble, with prices only just beginning to fall. There are a lot of very alarming indicators that are starting to emerge, and we could be about to witness a historic correction or maybe even a full-on crash. Today I'll be taking a look at the new data that we have got surrounding the current housing market conditions, as well as where the market could be heading over the next year or so. So to start off with, I'm going to look at the home builders, because it's looking like they are starting to lose confidence in the housing market. So US home builders are rapidly losing confidence in the health of the housing market due to the current economic conditions that we are seeing, and the National Association of Home Builders Index is now at a historic low. So this index is based on a monthly survey of the NAHB members in which they rate the current market conditions for the sale of new homes, where they believe the market conditions will be in 6 months' time, as well as the current traffic for prospective buyers of new homes. Now, as you can see from the chart, the index score has now dropped to 49, meaning that aside from the short-lived blip that we saw during the panic of April and May of 2020, we are now at the lowest level that we have seen since around 2013 and 2014. So if this index does keep dropping, then we will be approaching levels that have not been seen since the height of the global financial crisis, which was obviously centered around the mortgage and housing crisis that happened in that period. So this is now the 8th straight month of declines for this index, and is largely due to tighter monetary policy from the Fed, as well as persistently elevated construction costs for these builders. Now, mortgage rates and interest rates are also much higher now compared to the last few years, and while house prices have still not dropped significantly by any meaningful percentage as of yet, in order to offset this increased cost of borrowing, demand is starting to cool off and is leaving many home builders struggling to actually sell inventory within a reasonable period of time. And on top of that, 1 in 5 home builders told the NAHB that they were reducing prices in the last month in order to increase sales or limit cancellations. So demand is falling while inventory continues to go up. So national housing inventory in the US continues to climb higher, with active listings coming in at 748k in July, up a whopping 20.8% from the 619k that we saw in June. Now, it is important to note that inventory does usually peak in the summer months according to historic data. However, it is clear that this current surge in inventory is a lot more rapid than what has been seen in any period of time over the last 5 years or so. Looking at specifically the supply of new US one-family houses, the months of supply available has now reached a fairly significant point. So the months of supply for this property type is now up to 11 months worth of supply, up significantly from just 3 months of supply that we saw in late 2020. So what's most concerning about this particular metric is that we have now reached a level of supply that has not been seen since the 2009 global financial crisis. So again, this is a concerning metric to see. It's clear that falling demand is certainly contributing towards the rising housing inventory that we are seeing, as new home sales for July came in at 511k, which was down compared to both the prior month as well as the expected figures for this month. So it was down 13.4% compared to June's new home sale figure of 590k. However, it's also massively lower than the analyst estimates for July, which were 575k. So that's a whopping 64k home sales short of what were expected for the month of July. So the year-over-year percentage change for new home sales is now down to minus 30%, and is another metric that is starting to look an awful lot like the 2008 financial crisis, where we saw similar figures for this metric. So it is worth considering that year-over-year data always does look worse if the previous year's data was extremely good, which in this scenario is the case. However, the fact that yet another metric is starting to line up with the most previous big housing market crash does make the data look quite worrying, to be honest. And then also to touch a bit more in detail on the current interest rate environment, interest rates have been rising from recent Fed hikes, which is driving mortgage rates up and putting further downwards pressure on housing demand due to the current unaffordability of housing. So the 30-year fixed rate mortgage had dropped slightly to 4.99% at the start of August this year. However, it has since rebounded and is now back up to 5.55%. So this is the highest mortgage rate that we've seen for over 10 years now. since, again, before the financial crisis, and massively up from the lows that we saw in January 2021, which were at 2.65%. Now, a growing mortgage rate obviously makes borrowing more expensive and makes housing more unaffordable for people, driving home prices down from the current levels because people simply cannot afford to spend as much as they once could when the mortgage rates were lower. So overall, we are seeing that house prices are continuing to fall. So new Redfin data taken from over 400 metro areas in the US is in, and we can see that house prices do continue to trend downwards from this data. So the median sale price for homes has now dropped to 371.1k, which is down 6% from the record high of 394.8k that was hit in late June. So this price is still up 6% year over year though, meaning that there is still plenty of room to fall further. The median asking price for newly listed homes is also down by around 5% from the all-time highs of 382.5k. So we are definitely seeing a continuing trend of falling house prices as well as a falling median asking price, which does suggest that the balance between demand and supply is further shifting towards an excess in supply versus demand. We can fairly confidently say that demand is falling based on the data mentioned earlier around home builder confidence, as well as mortgage rates being higher. So it does also appear that this sharp fall in demand is the major driver behind the falling house prices that we're seeing, and this Redfin data does suggest that supply is not actually increasing right now. So new home listings are down from previous highs and are also down 15.4% compared to last year. So if you can't afford to keep up your mortgage payments, it's probably not a good time to actually switch homes right now due to the higher interest rates that we are seeing and the higher mortgage rates. So many homeowners that bought a house in 2021 or 2020 managed to lock in a low interest rate mortgage, which means that it would be quite costly to switch homes right now and take on a mortgage with a much higher interest rate. So just because there are less new listings though, this does not mean that there is a lower supply overall compared to demand, and it could mean that there is simply less people looking to switch homes, which mainly has a net neutral effect on the housing market in terms of supply and demand. Supply can also be a bit higher due to it taking longer for people to actually sell their home, and the data suggests that this is actually the case. So it's now taking people on average 25 days to sell a house, which is up quite significantly from the low of 17 days that was set in May and early June earlier this year. So people are finding it more difficult to offload their home, and therefore this backlog of home sales is gradually starting to build up in the overall supply. Now, a few other key metrics of note from this research include the number of homes that are having their price reduced, staying unchanged at 7.7%. So 7.7% of listings having a price drop is still up massively compared to anything that we've seen in recent years, and remains the record high seen so far in 2022. However, the fact that it has stayed static and not continued to climb even higher is probably a positive sign for the housing market, in all fairness, as it does suggest that the gap is beginning to close a bit between seller expectations and the price buyers are willing to pay. So on top of this as well, the average sale price relative to the listing price has now reached 100%, meaning that the average home is now selling for exactly the asking price. Now this is very interesting to see, as it's not reached this point since early 2021, because we've had over a year of, quite honestly, craziness in the market where buyers were actually having to bid above the asking price in order to secure a home due to the massive demand that we were seeing and all the people bidding for homes, making people actually have to bid over the asking price in order to actually secure the home that they wanted. Additionally, taking a look at some of the key leading indicators from this research, mortgage purchase applications are down 21% compared to last year and also down 1% compared to the week prior. So this is relatively unsurprising given the contrast between mortgage rates today and mortgage rates last year, and it's clear that just not as many people can afford houses in the current economic climate. And then on top of this, touring activity is down 6% compared to the start of 2021, again suggesting that there is a falling demand with less serious buyers actually looking around homes on the market. So this leading indicator data does suggest that house prices could continue to fall over the coming weeks and months. However, a fall in the mortgage rate could put this on hold and actually cause house prices to stagnate rather than fall. So it will be very interesting to see where rates go in the coming months and what the Fed actually do. So that was all for today's video, guys. I hope you did find it useful and informative. It's certainly not looking too good for the housing market, with home builders having a lot less confidence in the market compared to before. Inventory is continuing to go up. Demand seems to be falling quite significantly. And then on top of that, house prices are continuing to trend downwards, now down 6% off the all-time highs. So yeah, it's definitely not looking too strong for the housing market right now. But in saying that, all it takes is mortgage rates to actually stagnate or maybe even go down, depending on what happens with the interest rates, to actually swing this market back in the favour of the of housing prices and to actually push housing prices back up. So it will certainly be interesting to see what happens with rates in the coming months and years. With that being said though, guys, please bear in mind that this video is purely based on my own research and my own thoughts and opinions. It's not financial advice, and I am not a financial advisor. It's purely for entertainment purposes only. But with that being said, please remember to leave a like if you did enjoy the video, as that does help out a lot. Also be sure to drop me a comment, let me know what your thoughts are on the current housing market conditions and where you think it could go in the future. Be sure to subscribe as well if you want to see more videos similar to this in the future. And apart from that, guys, thanks a lot for watching.